My video. This one is definitely the most important one because it's the area that is the most difficult, the one that gives buyers the most trouble with their financing. This is the part that always delays closings when there's a delay. Doesn't happen often, but when there's a delay, it's almost always assets. This is the part that always frustrates buyers because sometimes there's a lot of back and forth when it comes to assets. So why is that? It does matter where your money is at closing. So a lot of people say, if I have the money at closing, what does it matter where I got it? Well, Fannie Mae, Freddie Mac, FHA, VA, all have rules about what are eligible funds and what are ineligible funds. So for example, eligible funds, your money in the bank, retirement accounts, as long as we can document the transfer from that retirement account to your checking or savings account, we can use that. Gifts from relatives or someone with a financial interest in the property. So this would be like a fiance, a partner that's going to live in the house with you. They're going to verify that by maybe a piece of mail that said you guys lived together before, so we can kind of show that you guys do live together and are now going to live together in the new house. Little broader topic there, but those are eligible funds. Seems pretty straightforward. Ineligible funds, taking a loan out, an unsecured loan. So you can take a secured loan out, and those are eligible funds. If you have a car that's free and clear, you can get cash out on a car loan. If you have another house, you can take a line of credit out, get cash out on that. As long as it's secured by property, we can use that as long as it fits within your debt ratios. Unsecured loans would be taking cash out on a credit card, just taking an unsecured loan, taking a loan out from a relative or a friend. Those we cannot use. Also, we have to be able to paper trail because there are eligible funds and ineligible funds. If you have cash, we can't really document where that came from. So we do not like cash. So if you have cash at home, we need to get that deposited or figure something out. So we'll have to talk about that as soon as possible because we're going to go back 60 days on your assets. We'll go back for 2 months of bank statements. If you have cash, we need to get it deposited so we can kind of get through that 60 days. That way they're not going to see that deposit and we can avoid having to document that. So can't use cash because we can't document where it came from. So that also seems pretty straightforward. So what is the issue? The issue comes with how Fannie, Freddie, FHA, and VA look at assets. So they're looking for large non-payroll deposits. So if they see a deposit that's more than 50% of your monthly gross income or more than 1% of the purchase price, they're going to ask where it came from. So if you have a deposit in the last 60 days and it's not your payroll and it's large, or if you have a bunch of, if you have a string of even small deposits that are less than that 50% of your pay, but you have a bunch of them in a short amount of time, they may still come back and ask where those came from. And that's where we kind of run into the trouble. So with funds, maybe it's hard to verify. Maybe they're from legitimate sources, but now we have to go back and find that account. And this is where people as we get going in the process, we get a bank statement, a new bank statement. All of a sudden we see these deposits. Now I have to come back to you and say, hey, I need to document this deposit, this deposit, and this deposit. Now you're running around getting, statements on other accounts, and we have to paper trail it coming out of that account into your new account. If the deposits don't match, we have to explain why. So if you took money out of your investment account and the balance that went in is different, usually because you withdrew money or withheld money for taxes, we have to document that. So that's where people really get frustrated, is how much documentation we require. And if we're trying to do this in the middle of the loan process, so if you're getting a gift in the middle of the loan process, or you're moving money out of a retirement account in the middle of the loan process, we're collecting documentation, after you have a contract. So we might be 2-3 weeks into the process. And as we're getting new information, so maybe you deposited that gift from your mother, and now there was a deposit a week before, a large deposit. Now we have to go back to you again and say, hey, you got that gift from your mother, which is great, but now you had another deposit in between the last statement you gave me and that gift from your mother. We have to go and document that now. Another issue that pops up is when you're taking money out of an investment account, it's important to start that immediately. Where people run into trouble is they might wait a few weeks to kind of get it going. I know it's kind of a pain to have to go to that company, fill out the forms, get them turned in. But a lot of times these retirement accounts can take 2 weeks to get your funds out, and you might order it 2 weeks before close, and we don't have the funds available by the time we're ready to close. And we also need a little bit of time to get those funds into underwriting, so underwriting can review everything and clear it off. So we typically need stuff in, ideally, 2 weeks before closing. So if you're withdrawing funds, it's important to get those out into your account immediately. So if you can do that even before you find out when you're pre-qualified, like now, rather than waiting until you have a contract, start doing that now. That way we have it all documented by the time you find a contract. If you're starting it after we get a contract, do it as soon as possible. Let's get exact dates it's going to be in the account so we can let the underwriter know so we're all prepared on what to do. Another issue that does pop up with gifts. So just like with your assets, if a donor's given you money, we have to verify they got it from approved sources. So they can't take a loan out and then give you the money as a gift. So we'll have to get a bank statement from them typically. And not in every case. So always talk to me about what exactly is needed before you move any money around. But a lot of donors will have issues with giving money. Obviously, your relative has no problem giving you the money, but now we're coming back and asking for bank statements from them. They kind of find that kind of invasive and don't understand why we're doing that, and that's where we kind of run into that. So make sure the relative knows that we may ask for a bank statement from them, showing those funds in the account, verifying any deposits in their large deposits in their account possibly, and showing those funds coming out of their account and going into your account. Getting copies of the check, cancel check if there was one. If it was a wire, getting a copy of the wire transfer statement. Just paper trail on all the movement of money. That's just FHA, Fannie Mae, Freddie, VA. They're all fanatical about where assets came from. So that is one area where people really get hung up when purchasing a house. So best thing to do, right in the beginning, explain exactly where all your funds are coming from. I'll ask you this, obviously, where all your funds are coming from. And through the process to understand that we may come back and ask for more documentation as we get more information. All right, that's it. Thanks.